Hi, fellow traders. What's happening? I hope you guys had a great holiday weekend. Hope you had a chance to spend time with your family and friends, recharge some of those batteries. We've got to finish this year strong. I believe that there'll be some significant opportunities throughout these next couple of months. We have to be locked in and make sure that we can get our fair share of them. So we're gonna have to make sure that our mind is prepared. Now I know that I was supposed to do this this weekend, but I got invited to a couple of tailgates. Ended up leaving early Saturday and didn't get a chance to knock this out. But you will get two this week. Don't worry about that. I will give you two. Also, right after this segment, I'm going to do the recap for my trades from today. And you'll get to see how I made $1,300 trading just 200 shares and two stocks. We had a pretty solid day today. Could have done this a couple of times last week, but just wasn't locked in. I was not locked in, but I was locked in today, and we made it happen. So we'll be recapping that. Also, the live recording of those trades are up on the website, AverageJoeTrader.com. If you go to the very last page, which is the morning recording page, the pre-market session is up there, and today's live session is there. So you get to see both of those trades happen in real time. I'm gonna warn you, it's not any of these fast trades like these guys like to brag about. These are real meticulous trades that we do. We look to do every day. So make sure you check that out if you're interested. So moving right along here, we are working at building out your trading. We built the foundation, we built the framework. We're building out the frame now, putting the walls in, sheetrock, all that stuff. Insulation, we're protecting it, and we're talking about managing our emotions. That's going to segue into the discipline component, and move into working on our weaknesses. But today we're going to finish up managing emotions. May get to introduce above average discipline, but we'll finish that out later in the week. So we're moving right along. So today we're going to review a quick bit. We're going to talk about preparing your mind and introduce emotional trigger number 2. This is something that will trigger us to become emotional, and that causes us to make some big mistakes. So I shared this with you last week. The trading is completely different than just about anything else we're going to try in life. There's very little that we can do to control the outcome of a trade. We can control what we do, but we can't control the market and how it dictates the outcome of a trade. We can't do that. No matter what we say or do, how much we want it, or how much we believe a trade should go in a particular direction, there's nothing that we can do to make it happen the way we want to. We have to believe that. So if we can't control the market, what the market does as to get our desired outcomes, we have to deal with those resulting emotions. And we deal with that by having a process that we can execute, having a strategy that we execute day in and day out, so that those emotions will rarely have a chance to creep in if things don't go our way. Okay, so we can eliminate emotions. One of the truths that I shared was we are emotional beings. To eliminate emotion is to eliminate a vital human characteristic that we need to help keep us safe. Our emotions, if we channel it correctly, can keep us in check. All right, and we talked about that first emotional trigger, which is having unrealistic expectations. Expecting every trade to win, expecting to have a home run on every trade we take. Never expecting to take a loss. Just unrealistic expectations. Now we obviously we have to have some expectation, because if we didn't, we would fail. So yeah, we have to have an expectation that we're going to succeed, but they have to be realistic. And realistically, we know we can't make money on every trade. We know that we can't control what the market does. The only thing that we can control will be our actions and how we introduce and take away our trades in the market. So what we want to get off today is, and it's not going to be a long one today, most people attack trading with an unprepared mind. Okay, when you come into trading, you have to account for all of the things that could happen, all of the things that might happen, all of the things that probably will happen, as well as the unknowns. We have to be prepared for whatever happens. But there's some things that we know that could happen. We know we can lose on a trade. We know that our platform could go down in the middle of a trade. We know that our internet could go out. We know that our computer could all of a sudden decide it wants to do something different. All of these things you want to be prepared for. You have to build that trading mental armor. If you read that book that I recommended last year, Can't Hurt Me by David Goggins, he talks about callousing your mind. The same way you build up calluses if you work with your hands. Those calluses protect your hands. You protect your mind by callousing it. And you do that by putting yourself in uncomfortable situations. All of these situations that can happen, that might happen, that probably will happen, and things that we don't even think about that can happen, we have to put ourselves in those situations. So how would you do that? If you haven't thought about it yet, if it hasn't popped into your mind, it's the exercise that I give you guys in Roadmap to Success. That exercise is not designed to win. It's not designed to make money. It's designed to put you in uncomfortable situations so that you can learn how to react before you have your money on the line. So that if you're in the middle of a trade and it rips against you, the next time you'll know exactly what you need to do. Hopefully you'll be able to recognize when the price action shifts and it starts to go against you, so that you'll be more prepared. All of these things come with experience. You can't read them in a book. You can't watch them on a video, on a dead chart. These are things that you have to see and understand and witness as it's happening. That's why I put so much emphasis on having a live trading webinar where you get to actually watch me take trades. And I could tell you exactly what I see and what I'm feeling. So, what am I seeing is helping me determine I need to get the hell out before it's too late. What am I seeing that's triggering that response? But in order to get to that point, you have to go through a bunch of uncomfortable situations. When I was in the Army in basic training, I didn't understand it at the time, but I realized toward the end, that their job, the drill instructor's job, was to break us down and build us back up, allow us to build ourselves back up, because that actually helped breed confidence. It put us in situations that we would be uncomfortable, and if you cheated it and you got into combat somewhere where you cheated some of the basic things that you're being taught, oh my gosh, you'll be one of the ones coming home in a body bag, and you could probably be responsible for your friends getting killed. So we had to go through all these things. I know this was just building a foundation for us. Everything we went through basically was to build confidence in our abilities, that we were confident in our abilities to be able to learn whatever we needed to learn and execute it with a high degree of efficiency. And that's what this whole deal is about, putting yourself in these situations where you're able to figure it out, build a process, build confidence in your ability to do all of these things. Because without it, it's going to be really, really tough. Oops, I just lost my screen here. All right, so I took this quote, kind of paraphrased it from the Rocky movie. You ought to recognize it. But it said, the market ain't all sunshine and rainbows. It's a very mean and nasty place. And I don't care how tough or how smart you are, it will beat you to your knees, and it will keep you there permanently if you let it. Now, somebody tell me that's not describing the market. I know he was talking about life in the movie, but I immediately focused on that is explaining what I deal with every day in the stock market. It's a mean and nasty place. It's cutthroat. All right, whether you feel it or not, it's cutthroat. And it doesn't matter how smart you are. I don't care how many doctorates you have. Those doctorates are not gonna, if you're a man, it's not gonna protect your family jewels. So when it kicks you, we're gonna fall harder. That's one thing I have found out, that we do fall a lot harder and a lot more painful. But we will stay down, if we don't figure this stuff out, and we don't take time to put ourselves in the positions to learn how to get out of this stuff. So the emotional trigger, the second emotional trigger that we have is the inability to accept responsibility for the results of our trade. Okay, that is what will keep us down. That's what will beat us down. is our inability to accept responsibility for the results of our trade. That's what keeps us on the ground. Because what we do when things get hard, when things get tough, when we get uncomfortable, we start looking for things to blame. It's for the reason why we are where we are. And that can't happen. But not accepting responsibility for the results, it causes us to chase stocks. Because we're like, this happened, so I'm just going to get back in. Or that happened, so I'm just going to get back in. Today was a perfect example of the correct way to get back in a trade that's continuing to move. Now, we'll talk about that here when I do the recap. But I took responsibility for what happened, and therefore my emotions were in check, and I didn't chase, or I didn't seek revenge from that stock. So this emotional trigger, it creates the chaser mindset, the chase is a race mindset. Instead of sitting, you're going to chase behind the market. And typically when you go chasing, you lose. Every now and then the market hiccups and you can catch it. But for the most part, you're going to lose. Or it triggers revenge trading. You're mad because you're out and the stock is still going. Or you got stopped out and the stock turned around and it went on you. So instead of you using your intellect to get back in the trade and build a trade plan, you start bitching about this happened, that happened, this, and it's not your fault. And you revenge trade. You lose money. All of these things, you cannot allow that to happen. So if we accept responsibility for the results of our trade, no matter what happens, if the internet goes out, so be it. We know that's a possibility, right? That's one of those things that we should have a process to help to deal with this if that happens. Just last week I had a trade. I was trying to get out. The platform locked up. I couldn't log into anything. But I had a process. I went through that process, and I didn't make any mistakes because I had a process to follow. I did it, and everything worked out. But if I didn't accept responsibility for it, and I didn't have a prepared mind, I would have fallen on my face. All right, so this is later on in that same quote from the Rocky movie. Now, if you know what you're worth, then go out and get what you're worth. But you got to be willing to take the hits. And not pointing fingers saying you ain't where you want to be because of the market or this broker or this platform or lack of capital or anything else that your little mind can make up. You've got to go out. You got to take those hits. You got to accept responsibility for all of that. Because the more you point, until you do that, you're not going to be successful. Okay? You're not going to be successful. Because, he finishes it up by saying, cowards do that, and that ain't you. You're better than that. We can't be cowards. Fear can't come into what we do. You know, we have to accept it and deal with it and not point fingers. All right, I told you, that's it. Short and sweet message. Short and sweet. You know, I wanted to finish up this emotional thing. So discipline is going to be a key. That one's going to be short and sweet as well. But it is imperative. It's imperative. I'm begging you. You have to get this stuff down. If you're not consistently profitable, if you're making nice trades here and there, but you end up giving all the money back and you're just not getting to where you want to be, this is the rest of the story. This is what you're going to need. And if you want to see it done every day, you can come join in the community and watch it happen live every morning. All right, so let's move into our deal today. All right, so you guys that's been in the community for the last couple of months, I'm sure you've noticed an improvement in my trading, improvement in my mindset, improvement for the most part. Now, the days I've been sick and under the weather, I shouldn't have been trading. You know, I knew better than that, but it's like you get in and you don't want to leave people hanging. But I saw this movie. I've seen this movie several times and I'm going to watch it more and more and more. It's In the Heights. This was a Broadway musical, you know, on Broadway several years ago. The guy that wrote Hamilton wrote this first, and it's a really, really good musical. But there was an underlying theme that was used throughout the movie. It's called Paciencia y Fe. And you guys have heard me say that over and over and over again for the last couple of months. This is what I found that's really helped me stay even keel. You know, I even listened to some of the songs from the movie right before the market opens. I played a couple for you before. But it's all about having patience and faith. For me, patience in the market, letting it tell me what it wants to do that day, and then I go and ride it and make money. You know, so I have the patience to wait on the market and the faith in my ability to execute my strategies, my process in the market consistently every day. So to me, when I say paciencia y fe, that's exactly what I'm talking about. I'm having patience in the market and faith in my ability to execute. Has nothing to do with whether the trade works or not. That's not what it's about. And we got to get that out of our heads. You know, that exercise that I told you about, that one of the things it's supposed to do is get out of your head about winning and losing, but about executing, grading yourself on, do I have the wherewithal to do the same thing every day, even though it may not feel good? Because this market is not going to feel good all the time. But you're still going to have to keep going. All right, so that's where that comes from. And you're going to continue to hear me say it in the room. You know, but now you know if you didn't. All right, so the market's still in the channel. We just pulled down a little bit today. We did close under the 5-day moving average, which is just a tad bearish. You look at the candlestick here, it is a tad bearish. but we're still above the 20-day. We'll see where we end up tomorrow. Will we gap down to the 20-day, or are we going to continue to trade sideways for 2 or 3 weeks like we have done? Every time we've had a pullback to this support. So, we just have to wait for tomorrow and see what it's going to bring us. Now, the market's not recovering now. It's still flat. We're a little, about an hour into the aftermarket, and it's still a little flat. So that's where we are in the market. So, not going to predict what it's going to do. It's in no man's land. So it could do anything. We're under the 5-day moving average. So technically, I can say we're probably going to pull back tomorrow. But who knows what's going to happen overnight. And we may open gapped up over this ascending resistance. So, we just have to wait. Have patience. Let the market tell us tomorrow morning what it wants to do. And then we adjust accordingly. All right, so the first trade, CRWD. This one is always a little difficult because it has larger spreads. Now, I'm going to, hold on a second, just to give you some context here. I was looking at this for a potential long trade at first. No, I'm sorry. Yeah, a potential long trade at first, running back up towards 270. Here's the 60-minute chart. I had the two stocks mixed up. So initially, look at where we were going. I was looking for it to hit 285 first, and then hit this next channel up here. Here is 285 up here over 280. We opened over the 280, this high. I was looking for that, and then I was looking for it to potentially catch this. So I thought we had some pretty good room to the long side. But look at what it did. It showed weakness early. We had this big sell-off candle first 5 minutes. And so why not opening range low? That's what we trade. We had room to the short side. So why not trade it? And, if it got stuck here, I could have bailed out, base hit, and let's move on. But we didn't. I got in 200 shares because this thing is spready. And I wanted to be able to give it enough room to work. So I got in, but what the mistake I made was the first profit target, I typically take 2/3 off. So with 200 shares, I may just do half. But so I just instinctively put a 200 share order in. And when it filled, I realized, damn, I just took off my whole position. But turned out to be smart because this thing bounced and went right back up and would have stopped me out. So I would have taken 100 shares and then got stopped out on the last 100. So I would have made half the money on this trade that I made. That wouldn't be good. So I waited. Once we took out the low, that's what this line here, this line is, I just did that. So I knew where the low was of this candle. Once we took it out, we're still before 10 o'clock. I can still be a little aggressive. So I got in. First target was this 269.68 level. That was good. The next target was like 267.75, but I took this halfway because we started to look a little iffy. So I went ahead and grabbed this halfway. I think I talked about it in the video too. And we ended up bouncing, and I got stopped out. So, and this thing pretty much turned around, the rest of the day. It didn't come back until later in the day, but this level, 269.68, held. You can see it pretty much held when it tried to come back the last time. So I think outside of this mistake, I executed pretty good. And even this turned out to be a really nice execution. So that was that trade. Again, this is the first trade that you'll see on the recording. Second trade, I was patient. Some people ask me, why didn't I take it up here? I wanted to wait until we had enough room for me to make a big trade. I don't like trading inside of these channels before lunchtime. I just don't. I don't mind waiting for them to break down. So this is the 5-minute opening range low. Once we broke down, we closed below it. All I needed it, wait for the next candle to make a lower low relative to this candle, and we're in. All right, so I got in. I was patient, waited for the setup to trigger. I got in and started taking my profit. This was the final target right here. I had no idea that we were going to sell off and get all the way down to 260, 270 something. I had no earthly idea. This thing went down like almost $4 beyond where I had my stop. Now, yeah, if I was in 300 shares, I would have had at least 25 shares to let go on this. But trading 200 shares, I stuck to my support, and I did not allow emotions to dictate me to come in and try to trade. I didn't look to blame anybody. I didn't look to do anything. I said, this is where my stop was. This was the final target. I took profit here. I stuck to my trade plan. It was beautifully executed. If it kept going some more, great. But that wasn't part of the plan. And so you could see all throughout the rest of the day, this level held up as support. This stock just had enough momentum to just roll through it before. You wouldn't expect it. But I could have easily got pissed off and chased this and not have been happy with what I nailed here. Just got pissed off and chased it. Now, it would have worked this time. But the next time I did it, it probably wouldn't. The next 4 or 5 times I did it, probably wouldn't do it. But that was the trade on COIN, and ended up today 1337.74. Only traded 2 stocks. I traded 200 shares each trade. Traded CRWD twice. COIN coin only once. And brought it home. Look, almost 700 bucks on coin. Almost $650 on CRWD. These opportunities were there last week. but I wasn't engaged. My mind was elsewhere. And I have fixed that. I made up my mind that there's some things I'm not going to do anymore. I'm even contemplating closing the community to new members until January, so I can just focus on what we got. All of these things were going through my head this weekend because I wanted to make sure my number one priority is to teach you guys how to grow your account consistently and methodically. And if I'm all over the place, it makes it difficult. But pretty pleased with today. Not gonna complain. I'm gonna take this and sleep on it. May even go out to dinner today to kind of I know it's just one day, but sometimes you just got to do it. You just got to do it. I don't want to come in tomorrow being lax and not staying true to myself. But sorry, it must be time. So I'm gonna wrap it up right here. I hope you guys have a great night, and don't forget, if you want to see the recordings, I'm gonna leave the link here to the website where you can click on them. I did make these open to the public, but normally they're just for members to watch. And I also figured out why they weren't updating. That was my fault. I did not tell the intern, he's dealing with antiquated technology for him. GoDaddy, I'm using the basic stuff, and he's like well beyond that. So he wasn't clicking publish, and you got to do that in order to publish it. So he's used to dealing with something that self-publishes. But got that squared away, and we should be back on track with those. So you guys have a great night, and I will see you in the morning.